Very good afternoon, everyone. I would like to welcome you to Trim Protect Group fourth quarter and full year 2022 earnings call. My name is Peter from Investor Relations. I'm your host. So today, our Group CEO Rohit and a few members from the senior management team will go through the presentation. During the presentation, please keep your line muted, and please take note that this presentation is currently being live streamed on YouTube. So with that, I will pass the floor to Rohit for his presentation.
Cool. Hello, everyone. Thanks for taking time on a Wednesday evening. Hopefully, this time is a bit earlier. Um, as you've all been going through us with a journey, we've always been updating you on the 8 commitments we had on 2023. Those commitments will come to this year. As I've always said, I never manage quarter. I always manage the commitment we have from a 2023 perspective. So obviously, this is the year for us to deliver on those commitments. The last 2 years and a quarter that I've been here and the team, our focus for the last 9 quarters has been to turn the business around and build it for a much bigger future that lies ahead. We had our highest full year top line since 2013 IPO. Very interesting. It is higher than even 2016 when travel insurance was sold with every ticket. And also our fourth quarter turned black after 4 consecutive quarters of losses due to varying reasons, as you all know. But overall, the message we've always maintained consistently was two of the three reasons were out of our control. Investment losses and the COVID helped, but definitely we always said the flow through will happen from the high growth to our bottom line, which you will see later in the presentation. Moving on the 8 commitments we have made, just a reminder to those of you who may be new and to those of you who've been there. Our first commitment was we will increase the retention of our business. So for some of those who are not from insurance, when I say retention, it's not customer retention, it's business retention, because as insurers we reinsure back to a reinsurer. Earlier we were reinsuring a lot, which meant we were not holding the business, which meant we were not actually being able to pass the expenses on, which also meant we were doing businesses which were dependent on others' capability than ours. So we said we want to have a retention upwards of 70% in all our line of business. The second one is we want to have a more efficient organization on a ratio basis, which means by 2023 we want to be combined ratio positive. We want to evolve our tech arm as a profit center. We want to, and because we believe the tech credentials are there and we believe it can become a separate line. I've always maintained that by the end of the year, early next year, we should have 3 separate lines of business: insurance, reinsurance, and tech. And that's our focus. To grow our ASEAN presence, we don't want to be limited to a few markets. And you will see that with our Vietnam business. And we are starting to grow other markets as well, which we can talk about. Mobile first, which means all our products have to be built keeping the mobile first philosophy in mind. So simplicity, which is, as you know, a core line of our business. To be a customer NPS leader, to be an employer of choice, and to be inducted into FTSE for good. Just on the retention upwards of 70%, we also made an internal target commitment that we will grow between 25 to 33%, and I'm happy to tell you that we have been growing well above that. Moving on, there's a very strong slide that I have. FY22 was the highest ever in absolute terms of top line we had, both in GWP and NWP. Although our focus is always NWP, we have not focused on GWP because GWP has a huge component of commercial risk in it. So I'm not so focused on GWP. I'm focused on the NWP line. Now, if you focus on the NWP line, you will notice we had 4 consecutive years of decline in the company, which is one of the reasons why the company had expense ratio challenges and many other challenges. And you will see now our NWP has grown close to 20% in 2021, and largely it was driven by a couple of quarters there. And then in 2022, we grew by 70 over percent. And the growth was driven across all the three lines of business. Of course, some of it was compensated by the exit in legacy business. But I think this is a very important point to capture, because what happens is when you're not growing, in the short term you may have profits, but in the long term you're not building a sustainable business. And that's why your expense ratio starts to bite you, which many of you would have seen in the past, because your earned premium base is much lower. If you look at our preferred segments, you will notice that our retention ratio is now above 70% in fourth quarter, but also for the full year. If you look at our retention ratio for the full year, we are at 62% from 45% or even lower. And this is something we are continuously increasing, and this year we expect to hit our 70% target. Why? Because we have already stopped underwriting any new business but large commercial low retention risks. There is renewal business left in this year, which was last year what we had written. So that's a normal runoff you will see, but there's no new business we are writing. If you look at the NWP, in fourth quarter we grew by 41%. Our travel was impacted, although Air Asia came back extremely strongly. In fourth quarter, we had a 3.3 times growth, and we are seeing that in this quarter as well, which shouldn't surprise you. Even stronger because AirAsia have released some of their numbers. Now coming back, yes, it was affected travel because the Middle East COVID travel business fell off, which meant although Middle East is still growing significantly above 2019, over 2021 and 2022 it was lower because the average premiums dropped. Now, if you look at the net written premium, a 41% growth is driven by all the three lines of business again. And if you look for the year, we grew at 72.5%, again driven by all lines of business, and of course we continue to exit the commercial business. We are focusing quite a bit on SME and B2B travel, and as you know, with Jubin's appointment, we bring someone with strong SME experience. The great news is our B2B travel technology, which we developed in Middle East and has done so well, so successfully with 2,500 over travel agents across 12 or 15 over countries, which Arijit, our CEO there, has been able to do. We have now launched it in Malaysia. We are in the process of launching in Thailand. We are hoping to launch this month. And obviously this, we believe, will open up a whole new set of opportunity. As an example, roughly 30% of AirAsia business also comes from agency channel. And for us, we have never looked at that channel in the past. So it's not just AirAsia, but it's also other travel agencies and other businesses who can use our travel tech, deploy it, and work with us. On the SME side, we have started already launching a few offers in the market. More user-friendly sales kits, user-friendly propositions so SMEs understand us easily. And we are significantly ramping up our effort. We've been hosting several industry roundtables, engaging micro SMEs, etc. And you will see in the coming few months that we will have specific SME offers, both through our life business led by Chuli, as well as our GI business led by Jubin, but also in other countries. Just on AirAsia, other than the fact that we are seeing a good pickup of sales, definitely, we also had a one-off launch of a very unique campaign where we partnered with AirAsia to provide free flight delay guarantee. Obviously, it's not free for us. We get paid by AirAsia for this one. Post the campaign period, we will be doing it will be available for customers to buy, and you can actually buy it now as well. This is outside of normal travel insurance. Flight guarantee is a product during COVID that's become quite popular in many countries, particularly in countries like China. So we have brought that in. Based on our data of flight delay of AirAsia, it is very, very profitable, and we don't see any issues, but of course we will continue to report it. Very happy to inform you that we are also bringing parametric claims, which was only available in Vietnam later, for big pay customers alone, which means if you're a big pay user and you have flight guarantee among our promotion scheme, you don't need to pay, you don't need to raise a claim. We will pay it directly into your account within 3 days. So it's similar to what we have built in Vietnam, but also in the Middle East. Moving on, digital partnership, as you know, Janet's been driving a lot of strong growth for us. We moved from 15 to 50 to 69. Some of you wanted to know a little bit more about it, so we're going to give you now more information based on your feedback at the previous analyst meetings. Our digital business has also grown 70% this year. As you can see, it's a pretty sizable contributor now. And if you look at our country breakdown, we are starting to acquire more partners across the board. And the partners in line with our business is primarily at this point in time within the lifestyle space, but we are starting to have partners in other places as well. We have gone live with a few interesting partners. We have gone live with VNPay, which is the largest digital payment gateway. It's a behemoth, 15 million users and 150,000 corporate clients. So we went live with Viet, our local partner there, as well as VNP. We launched international travel pay with them. We have also done a tactical with Thai Airways, where we provide inbound travel insurance for flights from Australia and New Zealand. And with Boltec, as you all know, it's a multi-billion-dollar company. We have launched mobile protection cover in Malaysia, so with many retailers as well as telco operators, including Samsung phones, etc. We are the insurer over there, and you will notice we cover extended warranty, liquid damage, accidental damage, crack scheme. This business is a low retention business because initially we are still learning the space, but it's again a very interesting opportunity that we have built. And if you go back to our initial statement about what matters to a Gen Z or a millennial, you will remember mobile phone was one of the key pain points for all of them. Moving on, we improved our fourth quarter combined ratio as premiums started to flow through from NWP to NEP. So as you can see, a combined ratio for fourth quarter did improve from 112% to 103%, and we expect this trend to continue by the end of this year. As we said, our internal target remains to be below 100% on combined ratio. Obviously, there was a deterioration, which we've explained the reasons before. A lot of it is down to whether the figures flow through as well. Our commission has increased, but you can see it's starting to stabilize a bit. Our claims ratios, while it went up initially because of the motor situation in Q2 and Q3, we did see some improvement in the incurred element in Q4, although not overall because we're still being pragmatic on our result. The reason being that, as I told you, the price was trailing the market because our price was pre-COVID and loss ratio was already COVID. But that's something we've already fixed, and as I said in the last quarter, and you can see that that's why Q4 loss ratios have stabilized, as you can see, and obviously our expense ratio continues to improve significantly, and I think that's a critical element for all of you to look at. On the tech side, I think Prashanta and team have been driving quite a bit of strong evolution. We continue to grow. As you know, our cloud deployment is continuing strongly. We are deploying our systems in more countries, more systems. We expect to have telematics and hyper personalization this year, and our policy issuance numbers have gone up through our systems. And we are continuing to look for new partners who will pay for the system at the right time. Obviously, we'll keep you posted as those partnerships are signed. Our relationship with Bao Viet in Vietnam, as I told, Vietnam business is starting to grow. You can see it from almost nothing, and I did tell you that I expect Vietnam to grow this year. And you can see the numbers. We almost did about 20 million, and we expect this number to continue to grow. We launched new partners with different propositions. VNPay is one, and we are hoping to announce a couple of more very important ones soon. So definitely it's a space where with our local partner, we are able to open up a lot more insurtech opportunities because of our tech credentials. Offering our customers mobile first, yes, I think it's always a known fact that our mobile adoption is not that much. But again, we don't want to be the one who's driving mobile adoption by just paying customers. We have launched a health tech proposition late December, and we will continue to launch new propositions. So telematics will come in. There's a lot more you can do on the mobile app now, and you will see in the next phase you're going to see a lot more activity, and this is a place where I think you're going to see a lot more from us, because we're going to use it more for upsell, cross-sell, servicing, and so on and so forth. And also the mobile app could potentially be deployed across other markets and other partners as well. Okay, moving on. Very happy to tell you we have the latest customer NPS source. This is an independent study by Insights Club. Our customer NPS has improved dramatically. If I compare quarter on quarter versus last year, our customer NPS has gone up 25%. We are pretty much on par with global industry standards. And you will notice that we are better than the competitors we track ourselves with, typical competitors who have more of a digital consumer play. Our partner NPS, while it's deteriorated, I think it's not really a deterioration. It's still better than global industry. The reason is we've now added a lot more partners. So now it's not just TP, EMEA's partners. We have everybody. We have agents, brokers, digital partners. We're speaking to everyone. So obviously that gives a good reflection. We won the award for customer experience as well, and I think it's an area we continue to drive. Our customer tracking metrics, which is something I'm very particular about, our unique customers are rising with the reopening of the economy and travel recovery. So you can see that our unique customers are improving. I think our average product and active policy definitely is an area we have to look at. The reason is we are acquiring customers much faster. So I think we are ending up becoming a one product company, but I think this also gives us the opportunity in Q1, Q2 this year on how we can upsell, cross-sell to them. For example, definitely are we selling enough upsell, cross-sell of motor PA on a motor base? We saw some interesting numbers in the first couple of months this year. It's something we are continuing to drive because we believe there's an opportunity there. And the age breakdown of our customer is very much aligned to our business model. So if you look at it, almost 65% of our customers are 45 years old and below. Our employee NPS has also moved quite significantly. You can see it's moved from +5 to +26. We're hiring a lot more younger people, and we continue to be, I think Sui and team are doing a lot of great piece of work in making us a very different employer. It's very important. We are a different employer for the market because the market has to see us as a vibrant, young, organization, which will also help our cost base, but will also help us, behave differently as an organization. There's a great focus on interns, and there's a great focus on us simplifying and automating a lot of work that we do. You will see us heavily involved as thought leaders in many university projects and other initiatives as well. So that's something we are quite particular about. Okay, moving on. On ESG, I think you know most of it, but I think happy to say that we continue to drive this quite positively. You know, in the fourth quarter, we won the Edge ESG award, which was purely an award they made based on FTSE Russell ratings, and we continue to get many other awards. We are the only insurer in the FTSE for good constituent. We do zero coal. We've decided to do zero coal in underwriting. Our charity element is growing. We're doing more CSR hours for each employee compulsory. We're launching products with charity elements. Our women in leadership is at 38%, and our women on board is 50%. So again, you will see that clearly your organization is not just about being paperless, but a lot more than that, because for us sustainability is not a nice to have, it's a must have, because for the consumer of today, for the employee of today, for the shareholder of today, it's very critical to be a sustainable brand. I shall hand over to our CFO, to talk through the key financials.
Hi. First of all, maybe let me just recap, I think, what Roy just mentioned. As you can see in our financial result here, in Q on Q, 4Q 21 versus 22, you can see our net return premium have grown by about 41%, and the earned premium grown by 56%. Even if you were to put it on a FY22 versus 21 YTD positions, you also observe a similar growth trend, that our net return premium grown about 72.5 and earned premium grown about 51%. This has then actually translated into underwriting contributions, which is our gross margin. That for 4Q, it has actually grown from 22.6 to 40 million, almost about 77.4 millions percent growth, which was mainly attributable to, I think, if you still remember, I think the Tenang's premium basically are now being earned over the period until next year. However, our underwriting profits basically has still recorded a slightly higher combined ratio, I think at 103.8, with underwriting loss at 3.2 million. 58% reductions in underwriting loss, but is yet to actually break even, mainly attributable to heavier branding activities basically that we have undertaken, I think, in quarter 4. Net investment income shows a very strong rebound in both our fixed income portfolio as well as our equity portfolio, that actually have grown to about 9.4 million investment incomes in the 4th quarter itself. But having said that, I think we have actually taken the positions to reduce our equity funds exposure from approximately close to 8 to 9% down to below 2% now as we speak. That will actually give us more stabilities in terms of our investment return, I think, portfolio moving forward. Share results, we still record a 2.1 million loss. That was mainly attributable to our Thai result. As you can see, that our losses attributable from our Thai operations has actually reduced quite significantly by more than half, from 5.2 to 2.1. As we see our exposure, I think, to COVID claims situation in Thailand actually stabilized. And basically all our policies in relation to the domestic COVID coverage has also expired in Q4. That brings our profit after tax positions to 2.2 million for the quarter, as compared to 4Q21 of 14.7 million loss. If we can go to the next slide. Okay, in this slide, I think on the top left, I think you can see here our equity exposure basically have reduced from 8% to 2% of our portfolio. Our unit trust funds basically you can see that 95% basically that consists of both fixed income trust funds as well as money market funds, which I think in order to ensure better stabilities in our investment returns, that will be also gradually shifting, I think, the weightage more towards money market funds. over the next quarter or next 1 to 2 quarters progressively. We still actually see a very strong rebound of our fixed income portfolio, especially I think in Q4 as well as in last month itself, first month of January 2023. Yeah. Now I think maybe we'll pass to Ben, our CEO from Thailand, to bring us through the COVID situation in Thailand.
Hello, hi. This is Ben Asanesan from Thailand. I think just to add on to what I was saying, our COVID exposure has dramatically decreased and actually almost nil now. As you can see from the graph here, the policies that we had in force for that are almost all gone. Particularly any kind of claims. We're seeing very limited claims, if any, coming in right now, given the number of policies that we have. Hence our COVID exposure has pretty much gone away since the end of last year. So this year, obviously there is no exposure on that, and we're looking forward to a much better year for this year, given that they're limited, if no exposure on the COVID issue. Particularly for Thailand, looking at the increase in travel from China itself, the border opening. And the large influx of tourism for Thailand. So we're expecting a strong recovery in the Q1 for our travel business, our PA business, as well too, focusing on retail as well too. So we expect our numbers to stabilize this year.
Thanks, Ben.
Sure.
Okay, so moving on, a slide we've been constantly reporting on. Unfortunately, I think this time our results are slightly ahead of the others. So we will have to update this for the next quarter. But if you look at our numbers, interesting, we are the only one who's actually reported a profit in a quarter versus the other three who have significantly higher losses. Our growth rate is also significantly good. Of course, Lemonade had an acquisition impact. And our market cap is not even 10% of some of them. Our price to book continues to remain quite attractive from our perspective. So it just gives you a sense of how we compare with other insurtechs. Okay, moving on, next slide. I think just in terms of closing, I think our key message is, while travel has not fully recovered to pre-COVID level, we already managed to record the highest ever top line for the group in 2022. We have shown that we can grow other lines of business, motor, travel, health, SME, etc. The recent reopening of the China border will be a massive added advantage for us. My team has been spending quite a bit of time in China, not surprisingly for any of you. I should be going there in the next couple of weeks as well. You can see it from the recent AirAsia operating statistics, on passenger carriage being quite encouraging. The group's investment return is definitely stabilizing, and we can see that continuously happening. The management of the view that investment outlook will improve in the coming year and contribute positively to the financial results from where we stand today, unless of course an unknown Ukraine situation happens. And for us, 2023 is the year where we have to deliver on our 3-year plan. So we remain committed on the 8 KPIs. Where I stand from, on the 8 KPIs, 5 of them we are on green, and 3 of them we are on amber, and we remain positive and committed to delivering on those 8 KPIs. So our shareholders see profitable growth for the year and substantial difference. I shall stop there.
Okay, thank you, Rohit. We're going to end the YouTube session and just move on to Q&A. Okay, so Q&A, please unmute yourself.